Well, good morning, everyone, and welcome to the Town Hall for March 2022. I am so excited to get started and can't believe we've been doing these for more than a year now. It's just amazing, and I want to thank everyone for their participation today. Really looking forward to hear this presentation today about taxes. So news and updates. We do have lots more town halls and dig deeper seminars coming up. If you need more information about any of those upcoming events or want to register for those events, please make sure to visit our website at IGSHPA.org and you can find all that information. We do have information about the IGSHPA conference coming up, as well as continuing ongoing renewals for any of you that need to do so. So, as I mentioned, just check out the events menu at IGSHPA.org and you'll find all the event registration descriptions and all the links that you'll need to be able to participate in those. We also have the 2022 annual conference coming up. We are again partnering with the National Groundwater Association to have a conference, and this year it's in Las Vegas. So it should be a lot of fun, but you can actually register on our website right now. We are starting to take abstracts and speaking engagements. So if you have any information you'd like to share with us, please make sure to send that along to info@igshpa.org, as well as exhibitor space is open for registration. So make sure you visit our website and take a look at that. So as I mentioned, CEUs and renewals. So we are no longer waiving CEUs for 2022 renewals of any accreditations or certifications. All of these speaking engagements, town halls and dig deepers, and the annual conference all qualify for CEUs. So make sure you attend with us and we'll be happy to help record that. But if you would like to have your CEUs recorded for that, just send us a message in the chat and the Zoom function today, and we'd be happy to do that for you. So just a little housekeeping for our presentation today. So if you have any questions for the speaker, please make sure to type those in the chat. I will be monitoring the chat today. And then at the end of the presentation, I'll ask those questions of our speaker. And if we don't get a chance to answer your question today, we will be following up with the speaker to get any of those questions answered, and we'll be happy to send that along. Last but not least, and I assume everyone is used to this by now, but please make sure that you're muted during the presentation so that we're not interrupting our wonderful speaker as he presents for us. So our speaker today, Charles Goulding, is an attorney CPA and president and founder of Energy Tax Savers and R&D Tax Savers, two national tax consulting firms. Previously, he was a managing director at Cooper Industries in Houston, Texas. Before joining Cooper, Mr. Goulding was vice president of Dover Corporation, an $8 billion sales New York Stock Exchange diversified industrial manufacturer, where he worked for 26 years. Mr. Goulding has a law degree from Brooklyn Law School, Juris Doctor, and an MBA from Adelphi University. His undergraduate degree is from the State University of New York at Stony Brook, where he double majored in political science and economics. So I will, you probably don't need me to read through this wonderful, extensive introduction, but I couldn't be more excited to have Charles with us today. So thank everyone for joining me, and I am going to turn it over to Charles.
All right, thank you very much. Thank you for the introduction, and greetings from New York, where it's snowing. It was 70 degrees on Monday, and here on Thursday it's snowing. So interesting turn of weather events. All right, I'm gonna get that up here. And with me is Randy Rothbard, who's one of our engineers. We're going to talk today about multiple tax incentives related to geothermal. Go ahead. Just a little propaganda about our own firm. We are what the market calls an interdisciplinary firm, probably an unusual animal that didn't exist years ago. So, you know, we have attorneys, CPAs, but the majority of our people are very technical, engineers, lead professionals. On the engineering side, we have mechanical, electrical, chemical. We have 4 biomedical engineers, environmentalists, mathematicians, just to give you some idea of the technical background. And that's because we're at this odd intersection of tax and engineering. We do a lot of professional writing. We're the tax writers for Commerce Clearinghouse and for Thomson Reuters. And below, you'll see some of the front covers for some of the magazines we write for. Go ahead, Randy. All right, we're going to cover 4 different topics. We're going to cover the EPAct $1.82 square foot incentive for geothermal on government buildings. We're going to switch then to commercial buildings, where we're going to talk about 2 tax incentives. We're just going to briefly cover residential geothermal. To be honest, we don't really do much residential geothermal work, but often when we do these kinds of presentations, we get some questions about residential. So we have a slide in there about residential. And then we're going to also, besides the energy tax incentives, talk briefly about obtaining R&D tax credits if you're involved in geothermal projects. This is just a map to show you where we've completed projects, and if you know the US well, you'll know the blanks for places where they don't have buildings, so that's why they're vacant. But we've handled tax projects in all 50 states and in most territories. Go ahead. All right. First, we're going to talk about the Energy Policy Act. Benefits were available from January 1, 06 forward, incentivized up to $1.82 per square foot immediate tax deduction. Last night, I got a call from somebody reviewing one of our reports, and he couldn't understand why it was $1.82 rather than $1.80. And the answer is it used to be $1.80, but it's been inflation indexed now, so the amounts will go up, and with the level of inflation we have now, it may go up quite a bit. The tax incentives are available for energy efficient lighting, energy efficient HVAC, which include geothermal, and the building envelope. Building envelope is everything on a perimeter of a building that touches the outside world. So, roof, doors, windows, walls, foundation. EPAct benefits are available for new construction and for existing buildings. They're available for tenant-owned improvements. And in particular, and I want to emphasize this because of the magnitude of the unique opportunity, EPAct benefits are available for designers working on government building projects. Go ahead. First question may be, what's it worth? So you just take some different square footages and you see lighting's the only category where you can get a partial deduction of 30 cents a square foot. But the 3 measures generally qualify for about 61 cents each. And this will quickly give you a magnitude of the benefits. Now, with government buildings, what's amazing is that the benefits go to the design team. And I want you to think about that for a minute, because if you're a commercial building owner, you have to make an economic outlay of the kinds of dollars we see in the total column in order to get the tax benefit. But if you're a designer working, and we're going to go through what that means. If you're a designer working on a government building, you get the same tax incentive. When you sit back and think about it, what's the designer's economic outlay for the actual project? It's of course 0. So it's amazing that the same deduction is available to the geothermal design team. Go ahead, Randy. Now, why did our government do this? EPAct was actually the brain child of a guy named David Goldstein, who was at the National Resources Defense Council. And if there's an objective test of a genius, David was a genius. He was a MacArthur Genius Award winner. And as a genius, he sat back and said, how do I change behavior in terms of energy policy in the United States? And as a genius, he came up with the simple answer: I'll pay people to do what they ought to do. So when it comes to a government building, there's normally not a party in there that's looking for a tax incentive. Government can't use a tax incentive. So David decided to recommend that the law give the tax incentive to the design team. Now, it's amazing the amount of government buildings in this country. And the primary categories are federal, where it could be a federal office building, it could be a local Social Security office, military bases. Military bases are one of the biggest project areas we work on. Courthouses, post offices. Post office is not technically a U.S. government agency, but it is a derivative thereof, and it does qualify for benefits. Other government buildings would include our national laboratories. State, again, it's office, transportation facilities, DPW type facilities. State universities, we worked on state university projects in almost every state in the United States. Courthouses, jails, penitentiaries. Then we drop down to the county, city, town, and village level. Offices, schools. There's a K through 12 school in every community in the United States. High schools tend to be big buildings. Middle school is a little bit smaller, and then elementary school is a little bit smaller. But that has probably been the biggest category of buildings we've worked on for the government centers. Includes town halls, includes police departments, fire departments, libraries. Now, it's important to realize that the EPAct tax benefit, meaning the geothermal tax benefit, can be split amongst the design team members. And we're going to take you through some examples so that you see how this works. The key point I want to make is that the economic benefits from the tax incentive for the design team is so great that you have to have an open discussion with the geothermal design team working on the building and make sure that somebody in your team is taking the benefit or that you're splitting it. The statute allows for the benefit to be shared. Goldstein, again, is a genius. He actually knew quite a bit about design, and he knew for these projects, there's normally a design team of different people with different backgrounds. Go ahead. Yeah, I thought we skipped something. This is to show you allocations. We just took $120,000 tax deduction on government building. Let's start at the simplest one, no allocation. Let's say there's an ESCO. By an ESCO, I mean an energy service company, and it does a geo project or any project that qualifies for EPAct benefits, and then it would get the $120,000 tax deduction. In our practice, we represent a large share of the tier 1 ESCOs and then even tier 2 ESCOs. We do a lot of ESCO work, and the ESCOs tend, because of their balance sheets, to get the big projects. They get the military bases, big state universities, and as you probably all know, they really don't, in most cases, actually engage in any measure implementation. They sub it out. So big ESCO will sub out the lighting, sub out the HVAC, sub out the geothermal, sub out the envelope. And actually, when they come into a military base or a school district, they offer a wide variety of generally energy-related services, but it can be swimming pool covers, it can be a whole bunch of things. Now, let's go to the two-party allocation. Let's say that we have a design and build contractor and an ESCO, and they decide to split it. I should say, when you do a split, it doesn't have to be done equally. It can be done in any percentage that the parties agree to. And although I'm taking you through 4 examples, we've had up to 6-party allocations. Then we go to the 3rd-party allocation. We're adding in a lighting specifier. So in this example, they're splitting it 40-40-40. And then we go to a 4-party allocation where we've got an architect in there. But we could have a 5th with an engineering firm. We could have a 6th with a geo drilling company. I just want you to see that the magnitude of the dollars is so great with a government building project. Make sure that you have an open conversation with your design team and somebody takes the benefit. And do not make the presumption that the other guy is going to take the tax deduction. I can't tell you how many times we've seen situations where the party who you most likely thought was going to take the deduction doesn't take it because they don't have tax capacity, meaning they're not paying taxes. Could be for a myriad of reasons. They could be losing money. They could have taken other tax incentives. They could have tax credit carryovers. We often see parties say, hey, I don't care who takes the tax benefits because I don't need them. Go ahead, Ray. We're going to talk briefly about the methods to qualify for an EPAct tax deduction. For lighting only, there's a prescriptive method called a counting method where you count the amount of fixtures, the wattage in the fixtures, and you see whether you hit the targets. The majority of the work we work on is using the modeling method. For those of you not familiar with energy modeling, there's a myriad of softwares like Train Trace and Carrier HAP that model a building, and what they do is they take into account the energy performance of the three systems. So for lighting, it's the number of fixtures, the wattage of the fixtures, and does it have lighting controls? Does the building have daylighting where there's a window to wall formula? For HVAC, it's the make and model of every unit. There's an energy performance criteria that pulls in from a table. And then for building envelope, it's the fenestration capability of all those items I mentioned before: roof, doors, windows, wall, foundation. And we choose a method depending on the nature of the energy project. Go ahead. Okay, now you must use the modeling method if you're striving for the $1.22 or the $1.82. When we get a project in, we first look at the measures and say to ourselves, can we get the $1.82? Because if we can get the $1.82, we don't have to worry about anything else. We're going to model for that, obtain that, and that's the maximum tax deduction. Now, for those of you that are familiar with energy characteristics of buildings, they really fall into two buckets. Some buildings are non-conditioned, meaning they're not air conditioned. Their lighting is the biggest energy user. What does that mean? In order to get the required 50% energy cost reduction in a building where lighting is the primary, there is no air conditioning, where lighting is the primary driver, you need energy efficient lighting. Currently, if we're modeling, you need LEDs to drive most of the higher levels of tax deduction. What are those buildings that I'm talking about that are lighting driven? They're warehouse and industrial buildings. A lot of warehouses either are not conditioned or they have heaters, but lighting is going to drive the overall results. Now, when it comes to human occupied buildings where you need HVAC, hotels, offices, most schools, there you need energy efficient HVAC like geothermal to qualify for the tax deduction. It's important to realize that you don't need a project in a current year to drive the full $1.82. You just need a project. So if one already has a very energy efficient building because you have geo or some other measure in it, then the next project could be lighting alone, can trigger the full $1.80. There was a lot of confusion when the law first came out because people mistakenly thought that the lighting and HVAC and envelope benefits were siloed, but they're not siloed. The drive from our Department of Energy here is to get buildings energy efficient. And as we just discussed, some buildings are lighting driven, some are HVAC driven. So the law doesn't care how you get there. It takes a holistic approach. And if, as a result of the next measure added to the performance of the building already, you qualify for the full $1.82, then you get the $1.82. Said another way, we often work on projects that get the full $1.82 just because they did a lighting project only. We work on many projects to get to $1.82, primarily driven by HVAC. The envelope, to be honest with you, doesn't move the needle much. I mean, you can pump in installation, you can put in a cool roof. I don't care what you do, but the building envelope alone, absent of energy efficient lighting or absent energy efficient HVAC, is never going to get you a large tax deduction. Go ahead. This actually shows you what you need to get the different levels of tax deduction. You need to show a 50% energy cost reduction compared to an ASHRAE standard out of a book. This also confused the industry. When I was at Cooper, I came out of the lighting industry. The lighting industry is used to selling a project by the delta between the building's performance currently and what the efficiency of the building is going to be after you put in the energy efficient lighting. EPAct doesn't care about the building's prior condition. It's looking at what is the energy performance of the building after the project compared to an ASHRAE standard out of a book. This really surprised the industry. I can't tell you how many times we were called up and they would say to us, you know, we took out XYZ in fixtures and we put in XYZ. We said, we only care about what you put in. What you took out doesn't matter. We're looking at the performance of the building post-project. Now, in large part because of lobbying by our firm, the original ratios changed. And because what we found in the beginning, we processed a tremendous amount of projects driven by lighting, but not enough by HVAC. So as a result of our calculations going back and forth with the Department of Energy, they lowered the amount of energy cost reduction related to the HVAC to 15%. So envelope is 10%, lighting 25%, HVAC 15%. But again, we're looking at everything holistically to see, can we get to a 50% energy cost reduction? Go ahead. Now, when we first started working on EPAct projects in the beginning, we'd get in what I call some routine projects where people would say, hey, I just put in the following package units, does it qualify? And we would say no. Or I put in a routine chiller, does it qualify? We would say no. And then all of a sudden, here and there, we would see projects that qualify, like geothermal, like thermal storage, energy recovery, ventilation, a chiller if it was in a building less than 150,000 square feet, chilled beam. These are very energy efficient measures. So I said to my engineering team, why are we taking in all of these projects when we increasingly know from the get-go that many of them aren't going to qualify? Let's flip this around and come up with a wash list of things we know are going to qualify so that our clients, troll for those kind of projects. And when we first did it, we had 7, which we put out marketing-wise, we called it the Magnificent 7. But then over time, we got up to this list of 19. What I'm trying to say is if you're working on a project that fits any of these criteria, odds are you have a project that's going to qualify for EPAct tax savings. Go ahead. This is just a little sum up. If we're working on the EPAct side, what are the best building opportunities? Commercial owner operators. Most of our commercial work comes in from owner operators. Why? Tenants often don't want to invest in the building, and historically landlords don't want to invest that much in a tenant use space unless they have a sophisticated tenant pushing them. Industrial buildings do very well under EPAct because energy efficient LEDs generally will drive a big tax deduction. Covered parking garages. In order to get a tax deduction for a garage, it has to be covered because that's the building definition under ASHRAE. When the law first came out, IRS said that parking garages didn't qualify. And we thought they were wrong because they weren't using a traditional tax standard. The EPAct uses an ASHRAE definition. So Jacob Goulding, our chief engineer, wrote to IRS and said, hey, under ASHRAE, a covered garage is a building, it should qualify for EPAct. And IRS, to its credit, came back and said, you're right. So they changed the law, covered garages qualify. We do an awful lot of garage projects. You want to look at large buildings. Large buildings with a tax incentive that drives off the square footage, large buildings are going to drive large tax deductions. New construction. Why is new construction so favorable? Because new construction has to meet current building energy codes. The ASHRAE standard, depending on what year we're looking at, is usually much less than current building code. So almost by definition, new construction is going to qualify for EPAct. And then government buildings in the three categories. And we just give some examples of the big guys: federal military bases, state public universities, and local K through 12 public schools. Now we're going to take you through, well, this is just an example of a geo project that we worked on, 600,000 square foot. It gives you the lighting technologies, which actually is, you know, this is old lighting technology. We're talking about T8s. It was a central system and serviced 14 buildings, and the HVAC technology was geothermal, and this one happened to model out to $1.20. This tells you by this model, by this example, the building was a little less than 600,000 square feet. So instead of getting a $720,000 deduction, you got a $719,000 tax deduction. Go ahead, Ray. This is the first 19 million in government building geo projects we processed. I think we're up to 25 or 30 million now. We like to keep everything to one slide, but this will just give you an idea. I think you'll see a large swath of states, a large, you know, a whole bunch of different types of buildings and the type of geothermal tax incentive that they receive. If you want to have your EPAct project analyzed, this is the kind of data you're going to need. You're going to need to send to either us or a firm like us. We have competitors. We're not the only guys that do this. We need to see electrical, mechanical, architectural, plumbing drawings. We love lead projects. Why? Lead projects have been modeled already. If we get in the lead standard templates, our engineers can quickly do a conversion calculation and see what the lead model results look like once converted to a tax model. It is quite a bit different, but our guys know how to do the conversion. Usually there's a workaround if you don't have all the data, a lighting survey, make and model of all the HVAC, and a description of the walls, windows, and roof materials. And we always need project cost, because you are limited to project cost. If your eligible benefit could be the $1.82, but if you spent less than $1.82 a square foot, you'll be limited to the spend. All right, that was an overview of EPAct in general, and with a particular focus on government buildings, because frankly for Geo, that's been the big area we've worked on. But now we're going to go through some commercial tax benefits. In the commercial area, there's generally two tax incentives. You're going to get EPAct, which we just discussed, and you're going to get where your alternative energy method is eligible, you're going to get a tax credit. So Geo, the 10% credit was extended through 1/1/24, combined heat and power through 1/1/24. And then you're going to get EPAct on top of it for the cost amount excluded from the credit. Go ahead. All right, now, ground source heat pump, we have to watch the nature of the equipment that's eligible for the 10% credit. Anything upstream, the ball field, the heat pump, that's going to get the full 10%. We can also include pipes, ductwork, heat exchangers, diffusers, other items that are, as long as they don't use alternative energy sources from geothermal. So in other words, at least 75% of the energy used by the equipment must be from geothermal source. Another heat creator might be a boiler, so that has to be excluded from the 10% definition. Good. Now, we've been in a very favorable environment for MACRS depreciation, and actually you get a bonus once you have equipment in the MACRS category, which includes geothermal. So it's 100% through this year, then it phases down to 80%, then 60%, then 40%, then 20%. So arguably, you want to use these scheduled decreases to argue for a quicker implementation in this current tax year. And you have a list below of the less than 20-year items. That's because those are the items that qualify for bonus, and so you want to know what those are. Go ahead, Randy. Now, a lot of times what we're really looking at is the time value of money, and it's kind of always amazing to me, although I am an accountant. Often you'll see accountants say, "Oh, isn't this only a timing difference?" Timing differences in tax are very meaningful and make a big difference on cash flow and net present value. So this just is a simple chart to show you for a $39,000 item. If you were straight lining it over 1,000 a year, what the NPV would be compared to 5-year depreciation or immediate tax deductions. And you can see the results are meaningful, they're substantial. So I would argue if you hear an accountant say, well, it's only a timing difference, you want to know what's the economic value of that timing difference, because it can be very, very meaningful. All right, now you want to put all your incentives together. We're going to take you through an example with 100,000 square foot building. We're going to use a 30% tax rate, a 4% discount rate. We've got some outlays for the system. And when our chief engineer does this calculation, invariably it's going to reduce the price of the project 10 to 20% off the original cost. We call it layering the cake. You want to, when you're putting together your proposals, have all the economics in there, and including any grants or utility rebates that can make a difference. Of course, the biggest cost savings item is the energy cost. After that, it might be a rebate if one's available. And then after that, the tax. But you want to put it all together to get the best economic return. Okay, this is an example to take you through the granular math. You can see up in the corner some of the components. So the $600,000 system is going to give you a $10,000 geothermal credit. You can see what the bonus depreciation is. You can see what the EPAct benefit is in the case of this. These are the the tax incentives using a 30% rate. And when you go through all the math, you'll see that 22.7% of the project was covered by the tax incentives. Go ahead. That concludes the presentation when it comes to energy tax incentives. Now, we're going to talk a little bit about getting R&D tax credits if you're involved in geothermal projects. by way of background, just so you know, our group of combined tax people and engineers, we only work on two things. We work on energy tax incentives for buildings, and then we work on R&D credits. Go ahead. An R&D credit is an actual tax credit, like the geothermal 10% credit. So it's a dollar for dollar reduction in your credit. Eligible expenses that are going to generate a credit include technical employee wages, supplies consumed in a qualifying project, and then contractor consultant payments in a qualifying project. This will just give you a broad overview of the R&D tax credit technology sectors that are big items and items, areas where we do an awful lot of work. We have a big HVAC R&D tax credit practice. We have a big lighting R&D tax credit practice. We have a big ESCO R&D tax credit practice. Go ahead. These are the 4 tests in order to get an R&D credit. You have to have a new and improved either product or process. Doesn't have to be new and improved to the world, only new and improved to your company. It includes new and improved software. Virtually every company today that we work on is doing something in the software area. It could be an ERP system, it could be an enhanced website, it could be analytics, it could be a software application, migration to the cloud. And then it could be a technical formula. Those tend to come up often in our food practices. Your activity has to be technological in nature, which Geo is going to qualify for. There has to be an elimination of uncertainty, not uncertainty at a level that you don't know that you can do the project, uncertainty at the level of how you're going to do the project. And then we have to demonstrate that there was a process of experimentation when you were deciding how to complete your project. So we want to give you some typical opportunities with Geo. When we work in the HVAC area, it's things that are taking place at geothermal equipment manufacturers, things that are taking place with HVAC controls, software, as I mentioned, things going on with pumps. And the key takeaway I want from most of the people on this call, that designers implementing custom solutions, which are often the case with geothermal, are going to qualify for R&D credits. So it's geothermal consultants, engineering firms, design consultants, architects, geothermal contractors. Go ahead, Randy. This gives you an idea of some of the types of activities that are going to help generate an R&D tax credit with a company engaged in geothermal. Now I want to give you some key takeaways from the entire presentation. That EPAct benefits are available from 1106, and I didn't make the point before. This is an amazing statute because there's no statute of limitations on the commercial side. Normally, a statute of limitations at 3 years, but for commercial, we can go back to any year starting January 1, 2006. So we often get projects where a commercial company comes in that has a portfolio, and we work across the entire portfolio to trigger the benefits. We've done that for Anheuser-Busch, for PepsiCo, many other large companies, Hershey's. Commercial buildings can take advantage of both the credits and EPAct, and then R&D credits are available for
$100 check to Rudy Bruno, and let me have it, and I'll mail it tomorrow.
All right.
Sorry about that. I actually, that wasn't us, it was somebody else. And those are the key takeaways from the presentation. I guess at this juncture we could swing to questions if we've received that. Oh, I'm sorry. We did add a geo residential slide because often we get questions, and it tells you the different credit levels for residential geo and what criteria they have to meet. And that's it.
Great. Well, we do have some questions.
Good.
One of the first is, will the slides be available to attendees? I assume that you will email those slides to us so we can share those with the group. if you
Yeah,
don't
so
mind.
as soon as we finish, we'll get them to you, and of course.
That would be great. So Terry Proper said the heavy lifting for the design of a commercial ground source heat pump mechanical system and closed loop ground heat exchanger is done by the mechanical engineering team. Seems like the mechanical engineering team should also be eligible for the majority of the tax benefits for eligible projects.
You only just watch this thing again.
So it seems like that would be true. I mean, based on
Yeah,
how you could divide up the pie.
Yeah, that's certainly a truism, and it should be the main. Ordinarily, one would expect the main geothermal engineering and design and build firm to take the if we're talking EPAct, the EPAct tax benefits. But again, individual situations can vary. You have to. The team has to have some openness and talk to each other.
Great. Someone asked how this would apply for nonprofit owners.
I'm afraid to say there's no benefits for nonprofits. There is always with renewal discussions of whether to expand the benefit for nonprofit, but there are no benefits for nonprofit.
Okay. If a bore field has a different owner than the heat pumps, can both bore field owner and heat pump owner take the 10% tax credit on their parts?
Now that's an interesting question. The answer to that should be yes. You have to figure out, the sum can't be more than the parts, so we'd have to look at it and divide it.
Perfect. Could you discuss the difference between the EPA or EPAct deduction and the IRS 179 benefit?
Yeah, 179, and this has always caused a lot of confusion. 179 is the general expensing benefit that is widely used by many taxpayers, whereas 179D relates to energy projects, and when it comes to energy projects, particularly the building envelope and HVAC equipment, they don't qualify for the normal 179, so you have to use EPAct to get the same expense. I mean, it's a good question because the actual results of EPAct is to give you immediate expense.
Great. So could a project get an R&D credit if the design team partners with university researchers?
Yeah, there's some actually special provisions, and you may be entitled even to a larger R&D credit. The fact that the HVAC team is partnering with the university would indicate that there's something innovative taking place and should give you, extra support for the project. We're seeing a lot of cooperation right now with universities and air quality. COVID's made air quality into a big item.
Sure. So based on the previous question about the Section 179 versus the EPAct, are they essentially the same? I mean, is there a benefit to taking one over the other?
Well, if you could use the regular 179 and qualify, then you don't need EPAct, but you're going to one item that never qualifies is building envelope stuff. So if a building by definition is going to have a building envelope, so if you qualify, you want to use the expensing against what we call the 39-year bucket. What your ordering or your filtering would be first. If you get the 179 regular expensing provision, you don't need us. You just do it and you're done. But if you still have 39-year property on your books, you want to use EPAct.
Just for those of us who may not know, could you just quick, super simple, what is Section 179?
Yes, Section 179 is a provision that allows for the expensing, meaning the immediate write-off of personal property. So there's lots of companies, particularly small businesses, if they realize that as they're heading to the end of the year that they've got a tax liability and there's things they need to do, they'll run out and buy more equipment because equipment's 5-year property so that they can expense it. That's what I call regular 179. But if you have 39-year building property on your tax books, you want to use EPAct and convert it to an immediate tax deduction. And again, these are all questions on the commercial side, but if we're on the government building side, EPAct is your only option, to get tax incentive for the designers.
Perfect. So can you comment on the use of tax equity investors to take advantage of incentives for nonprofits or municipal projects?
Yeah, we often get inquiries about that. It's a fairly complex area. They have to be analyzed on a facts and circumstances basis. Each one of them is different. It's possible, but not so easy. The other thing that surprises people is, although there are tax credits available, for geo it's only 10%. If you look at solar, where the credit's 30%, it's still hard to find equity owners to invest in a project to get the 30% credit. There's sort of a common belief by a lot of people that, lots of people will want to run in and invest in my project and get a 30% credit. Easier said than done. There are certain banks that will invest in alternative building projects, but they normally have to be a pretty large size.
Great. How can university projects take advantage of these credits? Is there a developer, or is using a developer the only option for that?
Well, I'd almost guess that was a university asking the question. These are designer benefits, which by statute go to the designer. The theory was the designer is going to endeavor to give the university an energy efficiency project. The university is going to get the benefit of the energy efficiency cost savings. The designer is going to get the tax incentive. That's how it works.
Okay. So this is kind of a big one, and I'm sure it's going to change as the bill changes, but how would the Build Back Better Act change the tax credits? Are these changes in the package of climate stuff that might get passed separately?
Yeah, there are, and maybe the better way to do that is when we send a presentation right after that, we'll send some comments about Build Back Better, because there are some goodies in there. And I think it's better that we just, list them out.
Great. Are you aware of any tax incentives for installing contractors for equipment to buy to install renewable technologies or installing geo exchange fields?
I am not aware of that. I mean, that would be the regular 179 expensing that you could take advantage of. And again, since it's decreasing, you want to, to the extent you need particular types of equipment, consider buying them this year.
Sure. And then do housing authorities qualify as local government for the designer tax credit?
Yes, but residential housing has to be 4 stories or above. And the reason is EPAct uses an ASHRAE commercial building definition. And ASHRAE says if you're 4 stories or above, you're a commercial building, so the benefits are available. Less than 4 stories, not available.
Okay. Personally, especially as it relates to the designer credit, I have asked designers of record before why they don't take advantage of these more, and the response is, oh, the paperwork's never worth it. So is that something that they just hire someone like you, a consultant, to do that?
Yeah, it's cents. The fees are only cents on a dollar. I mean, I have never seen anyone who is actually aware of the benefits pass because of the fees of the paperwork. I mean, that's what we do. We do it all day. We've got a whole room full of people processing these all day. Yeah.
Do you just really cover federal incentives, or does your firm work on any state incentives or local incentives as well?
Yeah, it's a good question. most states will allow you the benefit of the EPAct tax incentive. For R&D credits, about 40 states have their own R&D tax credit. So most states have that. You do have to watch on the state side with R&D credits that you timely file, because what a lot of states do, Pennsylvania is a good example, they have a pot. They'll say, we're going to give out 15 million in R&D credits this year, and we're going to cut the pot July 1. Maryland does the same thing. Virginia does the same thing. So you got to make sure that you know the date and you get your filing in timely so that you get your share of the pot.
So there's another question, and I will apologize. It is a lot of technical language that I am thrilled to hear about, but is it correct that the EPAct and the Section 179 now requires compliance with 90.1 2019 IECC 2021 for projects placed into service after January 1, 2021?
The answer is no.
Okay.
Yeah, because it would only switch to the 2019 ASHRAE once it's approved, and it has not been approved. So the belief set by the industry, and we're pretty confident in it, is that you could still use 207, but there is a day of reckoning coming where they're going to go up to the 219 standard, which is going to be harder to meet. But right now, you're good to go for this year for the 207 standard.
Is there a GSF target that you'd recommend for large projects where benefits are passed to the engineers or to the designers?
You mean a minimum benefit? Yeah. I mean, we would normally say, you know, at least a 60,000 square foot building. You know, something at that level to make it worth it. Now, for the ESCOs, I mean, just so the audience understands, when they send us in a military base or something, the fact that one maintenance shed or is small doesn't matter, because we're working on everything. You know, we look at it as the whole complex, not an individual building. But if it's an individual building, you probably want 50 or 60,000 square feet.
Well, and that's a good question, because we're hearing so much talk across the country about campus conversions and looking at whether it's a military base or looking at a university campus. Would you start whole? I mean, most of these projects are done in phases. So how would that look like for the designer of record to take? Yeah,
what happens is you're only entitled to EPAct benefits upon project completion. Now, project completion is not necessarily a C of O. You can have a small punch list, but that's the delineation of when a project completes. Now, if we're talking 100 buildings and 20 are done, then you can process those 20 that year, and then the next year another 20, and we work on many military bases and university projects where, frankly, they're always doing something.
Sure, absolutely.
Now, for the central plant, if your benefits largely rooted in the central plant, then the measure that's going into the central plant, GO or chiller, or whatever it is, that has to be completed.
Okay.
In the tax year.
But you could, I mean, so using that as an example, you install a central utility plant with a chiller, but a blue field's attached. You could take the incentive when that building, but maybe not the entire loop field has been installed.
Maybe a clear example would be there's a central plant being worked on, but before the central plant's completed, the lighting project's completed. You can take the EPAct for the lighting project, let's say get the 60-cent deduction, and then you come around when you complete the central plant, you get the other $1.20.
Oh, gotcha. Okay. Have you ever run into it where fees have exceeded the benefit that ended up being awarded?
Oh, no. In other words, no one wants to pay a firm like ours unless they're in the money, and we don't know if they're in the money until we see the project details. So our engineers will analyze the project, and they'll come back and say, this is the benefit you're going to get, and this is the fee. And then if they decide whether they want to pull the trigger or not. To be honest with you, I don't even know if we've ever had anybody that once they got the fee proposal didn't say yes. Usually people who are sending us in data have tax capacity and they're interested in taxes.
Perfect. Well, that is all the questions that we have for today. Any parting last words for all of us as we look at projects that could use these tax benefits?
No, I mean, my only comment is if you're involved in a government building project, make sure it's a box of cash. You know, if I put a box of cash on the conference table that we're sitting at right now and said to 4 people, can you guys come up with a way to whack it out and take some home? Everybody would. But for some amazing reason, when it comes to designers working on government buildings, for some reason, a lot of teams don't have. I can't even explain why. Look at it as a box of cash. That's what it is. And make sure that somebody's taking it. I mean, normally the teams that are on these projects, they all know each other. They work together on other projects. They need to have a discussion to make sure somebody takes the benefit.
It sounds like it might be a time to include you in those conversations when we start some of those. One last question actually just came in. How many years can unused tax deductions be carried over?
20.
Perfect.
Okay, 20-year carryover.
And is that the same for Section 179 and for the EPAct?
Yes, and
Okay.
all tax credits, tax deductions, you can carry over 20 years.
Perfect.
Yeah.
Well, then that is all we have for today. I thank you so much for your time. This has been incredible. I cannot wait to see those slides, and we will make sure to share those with everybody that's been on the call today.
Yeah, we'll do that. We'll add something on the Build Back Better so that your group sees that too.
That would be wonderful. We're hearing lots of information about that. I know everyone on this call has been very interested, especially with the opportunity for the commercial tax incentive to go from 10% to 30%. As someone who works in a lot of commercial buildings, I'm very interested to hear what opportunities we might have for that, to increase that benefit going forward. So with that, I really want to thank you, Charles, for your time today. It's been great. And if anyone on the call, if we somehow happen to overlook your question or you have more questions, please feel free to give us, drop us an email, let us know at info@IGSHPA.org, and we'll be happy to forward those on. But with that,
Thanks for having us.
thank you so much. And thanks everyone for attending. We'll see you at the next event. Have a great day.